is an economy driven not just, of course, by the underlying data, but by consumer sentiment, how people feel about the economy. And it was interesting to look at the report today, and you do get a broader sense of the divide out there right now between those folks who, despite having maybe flush bank accounts, despite having jobs, don't actually feel good about economic conditions.
That's right. I think consumers are looking really at a whole breadth of information around them. And, consistently over the last couple of years, consumers have felt quite a bit of confidence in labor markets, but that hasn't really been enough to offset the negative feelings that are coming from high inflation. That being said, consumers have noticed that inflation is nowhere as high as it was in mid-2022. You see that in their inflation expectations that have come down quite considerably. However, a large share, over 1/3 of consumers, continue to tell us that high prices are weighing down their personal finances.
I was also curious about some of the data that seemed to suggest that part of the concern consumers have right now is kind of the lack of visibility, or the lack of certainty, I guess, that they have about economic conditions going forward. So for even those folks who maybe felt good about current conditions, it just seems that there's this opaqueness right now about what transpires over the next few months or years.
There's a tremendous amount of uncertainty that's being expressed by consumers, more so over the long term than the short term. We ask questions both over the year ahead horizon as well as 5 to 10 years. And what a lot of consumers are telling us is they can't really tell us what's going to happen in 5 to 10 years because it depends on the election. And so consumers are really looking ahead at the presidential election coming up in November and reserving judgment over the trajectory of the economy until that comes into better focus.
Yeah, that lack of visibility is very frustrating. And I'm glad you bring up the election, because there have been studies done in the past that show there's as much a political divide as there is an income divide in terms of how people view the current situation. Democrats, when there's a Democratic president in charge, feel a bit better about the economy, while Republicans don't feel as good. Are you seeing that in the data that you have? Does it slice the data in that way so that it's visible?
Yes, I mean, that's something we have seen for decades, actually. It's always the case that consumers who belong to the political party that's in the White House tend to have more favorable levels of sentiment than people who belong to the other party. And right now is no different. Democrats see the economy, both currently and their expectations, much more favorably than independents, who see it more favorably than Republicans. That being said, you just showed us the dramatic increase in sentiment that we saw between November and January, and those are trends that we saw across all three political groups. So it didn't matter what party you belonged to, or if you were an independent. Everyone saw that improvement between November and January, and all three groups have been relatively stable between January, February, and this first reading in March.
Okay, so if that's the case, then what do you think is changing now? We saw a dramatic improvement from November to January, but now things have kind of leveled off. Why is that?
The dramatic improvement, looking back at that, was largely because consumers were starting to finally feel confident that inflation was truly going to slow down, that it wasn't going to come back. And that was something that was internalized at the end of 2023. And then once that was fully internalized by January, consumers have been looking around them and don't see any signs of any sort of dramatic changes or clear changes, either positive or negative, in the economy. So essentially, we're flat because consumers don't see any information that leads them to believe otherwise. And again, they sense the uncertainty ahead of them, and so they're reserving judgment at this time.
And we only have about a minute left, but I am curious, Joanne, if you could kind of close the loop for us here. When we talk about these sentiment indicators and how people feel, how much of a direct correlation can you find, or can you track at least, with future purchases? The idea that if people are feeling a little bit less, they're maybe not going to travel or not necessarily buy those big ticket items. Is that correlation still strong?
So historically, the correlation has been remarkably strong, with consumer sentiment being a leading indicator for how people are planning out their purchases in the future. Now, that relationship did shift quite a bit in 2022 and 2023, with consumers feeling quite dismal about the economy and having very low levels of sentiment, but still spending quite robustly. And the reason for that is because of the strong labor market and consumer recognition that labor markets are strong. And indeed, right now, consumers still feel quite confident confident that their jobs are secure. They feel quite confident that they're going to see income gains ahead. However, most of them do not expect these income gains to outstrip inflation. So I think consumers still feel comfortable spending at this time because they feel secure in their current situations, but that could certainly change going forward.